Perfect.
Okay, good afternoon, good evening, good morning. I think it's good evening for Dimitris. You're from down under, so we've got people from various time zones. So welcome everybody. For those that don't know me, I'm Alexis Nicolaou. I'm heading Grant Thornton Cyprus's distributed ledger business unit here in Cyprus. We are in fact the only firm in Cyprus professional services that have a complete service offering on DLT, covering technical, application and product. A bit over a year ago, having recognized the role that blockchain and crypto would play in the real estate sector, following numerous inquiries we had from property developers looking to exploit the potential of accessing this new pool of investors, the crypto investors. Together with our partners, from which you will hear a bit later, we decided to form the FuturEstate Alliance, a real world asset tokenization platform focusing initially on real estate as the asset class to tokenize. More about the FuturEstate Alliance to follow. I will start off today's presentations with a quick look at the issues currently plaguing the real estate sector, what real estate tokenization involves and what benefits it actually brings, looking at some market projections and the result of a recent survey, studying cases in the sector. I'll close off with some insights on how our platform works from a project owner and an investor perspective, the journey that the two experience, closing off with how the flow of funds actually works. My presentation will be followed by Christiana Aristidou, heading the hybrid law firm, partner also at the FuturEstate Alliance, looking at tokenization solutions and challenges from a legal perspective. Followed by Dimitris Dimitriadis from Zoltar.Agency, also a partner at the Alliance, currently down under in Sydney, giving his views on what makes the Alliance a different proposition from other offerings out there. Last but not least, he'll be joining us, I think he said at 4:30, Claus Skaaning, the CEO of DigiShares, the platform on which the FuturEstate Alliance has launched, giving us his expert views on the topic and some insights as to upcoming developments in the space, but also with regards to the DigiShares platform. So let me just kick off. Right. Now, what are the wrongs with the real estate industry and what is tokenization looking to put right? Real estate industry is plagued by slow, expensive, cumbersome and paper-based processes. Access to capital becoming more and more difficult. The administrative costs involved quite high, the ticket size for investors also quite high, in the hundreds of thousands, with low liquidity levels and investors often locked in for several years. Large number of intermediaries, increasing the costs and the inefficiencies and the lack of transparency in the whole investment process. Real estate tokenization. Real estate represents the biggest single asset class that may be tokenized. Global year real estate is around 228 trillion and only 7% of this is actually available to retail investors. If someone sees the people joining, please let them in as I cannot see giving the presentation. Only 3% of the global population has invested so far in real estate, but it's been declared that more than 80% view real estate as a good investment proposition. First, some basic facts about the real estate tokenization. Tokenization refers to the process of breaking down or fractionalizing a real estate asset into smaller units or tokens, which represent ownership in that asset. The use of smart contracts is what makes the tokenization process actually work. The terms of the agreement between the two parties, the issuer and the investor are actually written into code, and they're embedded into the token. Ethereum is the most prominent platform used for tokenization, with the ERC20 being the gold standard for that network. This is also the standard that we use at the FuturEstate Alliance. Some of the obvious benefits of tokenization: first of all, greater access to capital and increased liquidity, that being the most prominent ones, with investors with smaller budgets joining the liquidity pool in which the project owners can actually tap into. Also available to investors coming from the crypto world that are holders of significant wealth, which they wish to bring into the so-called real world. This is also the case with the FuturEstate Alliance platform. We have linked our platform with both financial institution accepting fiat, but also crypto custodian accepting the crypto. Other benefits: lower transaction costs and increased efficiency as a result of cutting out the middle parties, as well as various other processes and procedures, like for example those. Somebody mute themselves because I can hear myself duplicate. Thank you. No. Somebody, are you muted? Yeah, you are. Okay, good. So, as I said, those processes required by the real estate, the registry. Now, with tokenization, there are usually higher upfront costs, but much lower costs subsequently, bringing the average cost to about 50% of any alternative method of funding a project. And there have been studies out there that have actually looked at the number of projects that have taken place, and this is more or less the percentage of the cost. There are lower barriers to entry, as investors can enter markets traditionally out of reach for them with a smaller ticket. Finally, because of blockchain technology, there's enhanced transparency and there's a higher level of security. The future of tokenization, without a shadow of a doubt, a bright one indeed, projected to be in the trillions. You can see the references there from the various publications. And as the finance market state is paving the path for a more equitable, efficient, and integrated financial environment. A quick look at a very recent study by Digital Asset Research looking at 41 centralized tokenization service providers highlights what the principal use cases have been to date, with equities and real estate being the prime ones, and other financial products also featuring in that report. Our focus, as I mentioned earlier, FuturEstate Alliance, is on real estate, but we have been having financial products coming through as inquiries, and hopefully we will tackle one of those very shortly as well. Now, while Dimitris will be giving a more detailed presentation on the why FuturEstate Alliance, I think it's important at this stage to show what one should expect, because it's such a new fruit out there. So I think it's important to see the simplicity with which the platform actually works. So as a project owner, but also we'll see the next slide, what an investor should expect once on our platform. We try and make the process as seamless as possible, not forgetting that, as I said, this is a new product and people need time to understand and appreciate its purpose. In any case, we help project owners in every step of the process, both pre and post tokenization. Now, from a project owner side, in setting up a new project, first we specify a project title and details that investors will see once on the platform, including images or videos or any other material that the project owner wishes to upload on the platform. The blockchain we're working on, in our case, Ethereum as a default. The legal details of the project and the currency of choice could be, as I mentioned, both fiat and crypto. Next step, the creation of the tokens. We create the token name and the symbol and the initial supply of the tokens and nominal value. The contract is then ready to be deployed. Post-deployment, we can set certain other parameters, like, for example, whether the investors can trade the tokens on the platform. The permission groups as to who can do what on the platform are then set, and the project is activated. Then comes the setting up of the payment channels with details of how the investor can make the payments for the tokens. We will see this in more detail a bit further down. The management of the tokens and the investor information is where we can create more tokens or burn them if not needed anymore. If, for example, an investor loses access to their tokens. In share register, we see reports of all investors and their current holdings. There's a section for meetings and votes where we can set up investor meetings and voting sessions. There's a section for the project owner to actually upload updates on the project and keep the investors informed and engaged. Message section where the project owner and the investors can in fact communicate. Documents module is where documents like contracts that have been signed can be uploaded and signatures obtained. Finally, there's an activities log where you can see in detail all actions that took place on the platform. Now, from an investor's perspective, the journey of an investor starts with the registration form to become a user on the platform, creating a profile. They then get access to the platform and the project where they can actually view the details of the project of interest to them and all the related documents. It could be a business plan, it could be some licenses, it could be any project relevant details. Should they decide to proceed with the investment, they get to see the shares available and the price of those shares, and they then send a purchase request. This is where they are diverted to the environment of the financial institution we have linked the platform with to make their payment. We'll see exactly how on the next slide. Once payment is confirmed, the investor can see their investment reflected in their portfolio together with a share certificate. There's a module where investors can see all the contracts they have signed and download in a PDF format. Next is the marketplace module where investors can list their holdings for sale or purchase ones that have been listed by other investors on the platform. There's a messaging module where investors can communicate with the project admins. And finally, settings where investors can change passwords and activate a two-factor authentication. Now, regarding the flow of funds, and this is where I close, as explained in the previous slide, once a potential investor is vetted and the basic proof of ID on the platform, they are given access to the project details to evaluate the proposal by the owner, by the offering. Once they agree to participate, they're diverted to the environment of the payment provider that we have linked the platform with. This is an FCA licensed institution, that's the UK license, where they conduct the detailed KYC checks. If they pay in fiat, then the money goes into an escrow account in the name of the project owner and held there until funding is complete. We could apply soft and hard caps. If not successful, the funds are returned to the investor. If successful, then the funds are released to the project owner's account, also with the financial institution, the same financial institution. We're automatically informed of the transaction and get all the KYC details transferred to us for both our purposes, but also for the project owners, as they're usually obliged reporting entities. If payment is in crypto, the investor is diverted to a custodial account specifically set up for the project with a Czech licensed institution within the same group. And if fundraising is completed, the funds are converted to euro and released to the project owner's account. We only accept USDT or USDC. The stable coins. If fundraising is not completed, then the funds are returned to the investor. Once notification is received of deposits and KYC documents are also collected, the tokens are transferred to the investor's custodial wallet within the platform or non-custodial wallet if they so wish. I will put an end to it there, and I will allow Christiana. I will stop sharing. Give Christiana a chance for her presentation. Thank you very much. As I didn't mention that at the end we will leave some time so we can have a questions time, or maybe we can have a discussion amongst us on various issues relating to asset tokenization. Christiana, over to you.
Thank you very much, Alexis. Hey there, how are you guys? Good to join this webinar. Thank you for being with us. I will dive into a few legalese here. So I will try to keep it simple. Legalese is usually complicated, so I will try to keep it simple. So you have heard everything Alexis shared with you. So the most important, like for tokenization, is access to investment, efficiency gain, security and transparency, liquidity, flexibility, and of course soon we will also see we will also see that tokenization will enable us to use it as a collateral, and this is very important. Anyways, tokenizing real estate. Talking of real estate here, encompasses various ways of tokenizing real estate, numerous methods of tokenization. So I will focus here on a few ways to tokenize real estate. So the optimal way to tokenize real estate assets is ultimately a business decision, which will be based in a great number of factors here. So you will need to share with us the details of the property and all the details that you have in relation to the property, your investors, the locations, the jurisdictions you're interested in, to offer these tokens, the jurisdictions you're already working in. So everything will be taken into consideration prior to finalizing with you together, prior to finalizing the legal arrangement that will be followed in this case. So as I said, the optimal way to tokenize real estate is a business decision which must follow the model and characteristics of each project. Tokenization is supported and secured by a crucial functionality, as Alexis explained. Functionality offered, this functionality is unique because it is offered on DLTs. It is offered on distributed ledger technologies. In other words, it is offered on blockchains. Blockchain is but one distributed ledger technology. So this is the digital register of members, the blockchain, So change in ownership of tokens on blockchain is instantly reflected on this register. But I would say that the main ways to tokenize real estate, a few of the main ways to tokenize real estate are the following. First of all, we can tokenize the property itself. So Alexis previously talked about fractionalization. So we fractionalize the property in this case. We do the tokenomics and then we fractionalize the property. What are these tokenomics? Is counting. We do the necessary financial and business part of the work in how many fractions we tokenize, how much each fraction. That is based, of course, in various factors, including the valuation of the property and the amount to be raised and many other factors and predictions for the future. So first of all is tokenizing the property itself. This means that ownership in a specific property may be represented in many fractions in the form of tokens. Property is typically owned by one or a few entities. The capability of breaking down a real life asset, a real life property into many tokens, of course, opens the door for multiple entity ownership of properties recorded in safe, secure, and efficient way because it is recorded on the blockchain. The second way to tokenize is tokenize an ownership interest or tokenize an entitlement to share profits. This sounds like a share. Yes, it's like a share in a company, in a legal entity that owns the property or that owns another legal entity that owns the property. The method enables the indirect tokenization of property and real estate in this case is owned by a legal entity. Usually we call it an SPV. So if there's a construction company, let's say a development company, we separate these assets from the rest of the assets on that company, construction company, development company, and then we establish, we set up, we form, allow me to say, an SPV, which is a special vehicle, special purpose vehicle. And then that's the vehicle we are using to proceed with tokenization. So this method enables the indirect tokenization of property. So here you see, we do not tokenize the piece of the property that we have fractionalized. I mean, we don't tokenize a unique part of the building, let's say, of the land, of whatever. In this case, we tokenize interest, ownership interest or entitlement. So this method enables the indirect, as I said, tokenization of property. Real estate is owned by a legal entity. Investors receive tokens in the said legal entity. These tokens might be tokenized securities, for example, shares that are represented as tokens on blockchain, or they could be tokens bearing ownership, or dividend entitlement rights to the said legal entity, or bonds. And allow me to say that, to share with you that bonds is one of the main way of tokenizing property these days. As we see, it is one of the most trusted methods. So in addition to this basic tokenization, to this basic structure, it is possible to tokenize securities, as I said, in an SPV, which is set up especially for tokenization purposes. In this scenario, the SPV owns an interest in the legal entity that owns the relevant property, either because we connect the two companies, so they are considered as connected in this in one scenario, for example. In another scenario, via agreements, either a specific company agreements, bilateral agreements, or intercompany agreements that usually are agreements made within a group of companies. A group of companies, I mean, main companies, holding companies, affiliate companies, they are connected. They are intercompany agreements between them for providing for tokenization. So as you understand, it's about structuring, especially for bigger contractors, especially for companies that deal with lots of projects. And because sometimes we get one individual project owner or one individual project, one entity that wishes to tokenize. But usually we talk about bigger construction companies, development companies that have lots of projects. So they use a different special purpose vehicle for different tokenization purpose. So as I was saying, in this scenario, the SPV owns an interest in the legal entity that owns the relevant property. We create these relationships between them. We create them via concrete, strong, very good agreements that we draft. So the logic remains the same in this case where we tokenize securities, and in the case where we tokenize directly pieces of real estate. I mean, and regardless of the complexity of the structure, the logic is the same: the acquisition of property and the investment in property. The third way that I would say is one of the main ways to tokenize is tokenized debt secured by property. So similarly with the previous two methods I shared, especially the second one of tokenizing securities, this method, tokenizing debt secured by the property, offers indirect tokenization of property. Tokens, in this case, represent what? Tokens, in this case, represent the debt. For example, an entitlement to receive the debt contribution plus interest, which debt is backed or secured by the property. For example, it's linked within the agreements. Therefore, that the agreement will be reflected in the token, in the coding of the token. As Alexis said, the token is a smart contract. So in the coding of the smart contract, whatever legal arrangement we provide for will be reflected. So tokens, as I said, in this case, represent the debt, an entitlement, in other words, to receive the debt contribution plus interest, which debt is backed or secured by the property and linked, in other words, with the underlying property. In this case, as with typical debt investment scenarios, the property owner offers the property as collateral to the tokenized debt. So when we say offers this property as collateral, within the agreements, we do offering documents. We may need to do prospectuses to be submitted with SISEC. Up to 5 million, though, offering documents. If we have offering up to 5 million, as per the regulations of SISEC and the exemption provided by, there is an exemption provided by the prospectus regulation. We don't need any approval or any license by SISEC because we fall within the exemption. Therefore, if we want to tokenize up to 5 million and we want to offer these tokens as securities, what that means, we want to tokenize, we want to use this smart contract and produce a token that reflects a security, a share, a bond, a profit, as per, for example, what MiFID II, the regulation, provides. So mainly bonds and shares. In this case, we are supposed, when you offer securities to the public, you are supposed to become a public company and you're supposed to file a prospectus. We do that and we follow all rules if it is above 5 million in Cyprus when we use Cypriot SPV. However, we can use any SPV in any country. We do this comparative law, comparative regulatory service. So we can provide any SPV. We can provide several structures for the project owner to choose, and several legal arrangements to choose. For example, another one legal arrangement that I was ready before to share with you is tokenize a right to income. Just that. So you receive the investment and the token provides for a specified, an IRR, a specified income by the token holder. So as you see, I have described many different legal arrangements. These legal arrangements come with certain challenges. So come with certain legal status and with certain regulatory environment rules. So some people confuse between legal and regulation, law and regulation. And I guess most of the people out there are confused between what is legal and what is law and what is regulation, and they refer to both as is one and the same. So legal framework, a legal regulation, the law, in other words, has to do with clarity around legal status and rights associated with tokenized securities. And the regulation, clarity, actually is a treatment of tokenized securities as per the regulation and what they provide. So with the FuturEstate Alliance, what we do is that we help you. Together we choose the best legal arrangement that will be reflected in the token that you will offer in any country of your choice, and using any special purpose vehicle or not, depending on the structure, or even using more than one special vehicles, using a whole structure in case that will be the best solution for you. So thank you very much. This for the legalist part. So any questions you have, you can. Thank you. You can post to us via. Okay, thank you.
Thank you. I think everyone appreciates the need to have the right legal advisors on board once we engage into such a project. Dimitris, over to you. I appreciate that it's midnight where you are. So, thank you so much for making it.
Thank you very much. Just one small comment. I see also Claus as a visitor. So if it's possible to invite him as a speaker. I am also as a visitor, so please.
Claus will be after you, Dimitris. Yes.
Okay.
Yeah.
So hello everyone. My name is Dimitriadis. I'm CEO and co-founder of Zoltar.Agency, a Web3 marketing agency, and probably the only Web3 marketing agency in Europe that specializes in tokenization. And I am here with you in order to give you a sense of how we actually promote a tokenization campaign, and of course, what is all about FuturEstate Alliance and why this alliance has an actual value to you. So in terms of a campaign, always when we have and we do this all effort in order to adopt a platform, to have an SPV, to do all the legal procedures and create and be ready in order to fundraise, the final thing that we need, but also essential, is to have access to investors. And having access to investors is always a thing that we do within a marketing campaign, but this is not the actual classic marketing campaign that you already have internally. Is a marketing campaign that has to comply with all the regulations and also has to work and adopt and embrace all the technological challenges, because we are speaking about the cutting edge as regards solutions for liquidity in the real estate. So in terms of a marketing campaign, I want you to think in mind a huge mix of different things that you already know about marketing, from traditional investor relationships to traditional investor outreach to social media to digital marketing to media campaigns to actual Web3 campaigns inside communities. Because with this kind of investment and this kind of tokenization, we have access, and Christiana and Alex already mentioned, to almost 3 different bigger audiences. So a real estate owner can tap into bigger potential. So we have the classic real estate people that they want to diversify their portfolio and invest into a tokenization scheme that is inside the blockchain and can already tap with a small amount of money, because the thing and the fragmented part of real estate is that you need to have a bigger amount of money in order to play and have gains. The thing with tokenization, you can invest with a smaller ticket. So we have this kind of investors. We have also the big whales or the smaller whales of the crypto projects that they seek for lowest volatility and tokenization, because it's a tokenization of securities or security tokenizations, that are 2 different things, is a very safe harbor for all crypto investors. Of course, the final and the biggest audience is the actual retail investors, the investors that they have a small amount of money in their banks. They already learn that there are new tech things that they can invest. They already tried buying some crypto, or even with Revolut or other solutions. They already have an account in eToro, and they already buy some of a portfolio of stocks. So these actual retail investors, they can be a huge, substantial audience if you play your cards correctly in a marketing campaign within FuturEstate Alliance. Why? Because they can easily invest and bring home an actual big campaign that can lead us to a very fast funding round. So these are the things as regards marketing. There are different details and different things that we can diversify according to the niche, according to the real estate investment, according to the vehicle, according to the jurisdiction. But I will not deep into the details, because there is no reason for that. And why there is no reason? Because FuturEstate Alliance, and this alliance has one unique thing for every investor out there that's seeking to tokenize a real estate investment. And this is the actual one-stop shop with great expertise mentality. And when you need to run for a security tokenization and you just Google something, you see that, okay, I need to find proper legal. Then you search for proper legal and you start all the talkings, and the first thing that a legal advisor would say, okay, pass me the business plan. And then you see that your business plan doesn't have a lot of things inside. So you need a better business plan and you need an audit of the business plan. And after you pass the business plan, they say, okay, what is the allocated budget for media and marketing on the business plan? So you go to the marketing, and then in which platform you are going to launch, and you are going into the technical, and you have a huge back and forth of all these individual experts trying to form a consensus and be by your side. And this must be fast because, as you already know, real estate markets are moving fast in terms of investments because you have an actual asset and you want to monetize it as fast as possible. You don't want to be there standing waiting for the proper technological or legal solution or marketing campaign. So this is what we saw as a FuturEstate Alliance. And we say that, okay, we need to create a vehicle and a structure, something that is super solid and concrete, that someone can come in, get a 100% 360 holistic overview of everything, submit the ask, and in a very fast and efficient way gets a tokenization out there. So this is the actual proposition of FuturEstate Alliance, and this is what gives us the edge out of the market that is growing rapidly, but only to FuturEstate Alliance you can find a really 360 approach in order to launch even tomorrow. So that's it for me, Alexis.
Thank you, Dimitris. Thank you so much. Last but not least, Claus Skaaning. He's the CEO of DigiShares, the platform whose white label version we have actually launched our FuturEstate Alliance platform on. DigiShares, world leading platform. I think we are with the best, and we appreciate that day in, day out. Claus, I'm sure you have a lot of current and future stuff to talk about with regards to the sector and the platform itself. Over to you.
Thank you. Looking forward to speak here, and thanks for inviting me. And it's great to come after such great speakers and to hear about everything you can do in the consortium, right? Which is quite impressive and I think also quite unique globally. So it's definitely a great setup that you have. Let me just see if I can share my presentation here. I think I'm sharing now. Yeah, my name is Claus. I'm the CEO and one of the co-founders of DigiShares. We started about 5 years ago, and today we are one of the leading providers of solutions for tokenization of real estate and other types of assets. We have more than 150 clients in 40 countries around the world and headquarters in Miami. I'm based in Denmark myself. So we sell a turnkey end-to-end solution for tokenization, minting, tokens, fundraising, corporate management, share cap table management, trading, and so forth. It's highly customizable and configurable with open APIs. Has many configuration options, and we work with legal firms such as Christiana here to make sure that our clients are compliant. And yeah, there's full supported legal framework around the project. Everything we do is securities, of course. If you tokenize and fractionalize real estate and other similar assets, it will always be a security. So we are within the securities regulation, which is actually a safe place to be when sort of crypto regulation is developing as fast as it is right now. We're also working on launching our own exchange. We've been working on this for a couple of years. It's complicated both legally and technically, but we expect to launch it actually in Q4 in the US initially. So we are a pure tech provider, I would say, or a tech provider for the space. And our piece of the puzzle is that we come with the solution, the platform itself. Then we work with marketing companies like Dimitris and legal partners like Christiana and other sort of actors in the ecosystem. I think tokenization has been very well defined earlier on in the conference today, so I will skip this. I will also skim very quickly over this slide here. Sort of the benefits that we see the tokenization are quite wide and quite significant, and we see a number of use cases which I will present later. It's very fast to get immediate benefit from tokenization just by sort of using it to achieve cost reduction and automation. You can fractionalize, of course, and you can do peer-to-peer trading. One of the great innovations, I would say, of blockchain technology is that you can have a smart contract facilitating a peer-to-peer, wallet-to-wallet direct trade with no counterparty risk and without the parties knowing anything about each other. You just can't do that without blockchain technology, and the blockchain technology then sort of allows us to facilitate and automate a lot more of the transaction outside the existing financial ecosystem. So we give our clients full control over all of this processing and workflows and so on with their own platform customized to their requirements. We help them automate, reduce costs, make assets liquid. This is an important point. Just by making an asset or real estate property liquid, you make it worth 20 to 30% more. This is called the illiquidity premium. And it's actually proven, and many industry reports sort of document it quite well. But it's also quite easy to understand. So if you have two assets that are otherwise exactly the same, but one is liquid, the other one is illiquid, everyone will prefer to invest into the one that is liquid, making it worth more, of course. Then I would say, due to the fact that we can fractionalize, we open up for retail investors. Making an asset more liquid makes it more interesting for institutional investors. So we actually open up the real estate asset class for multiple other types of new investors. As mentioned earlier by Christiana, I think longer term, I would say within a year or two, I think we will see massive innovation and opportunity materialize around using real estate-backed tokens as collateral for DeFi lending, where you can, in fact, with just a few minutes, go into the DeFi ecosystem and pull a highly competitive, highly efficient loan from DeFi borrowers, instead of having to go to the bank and wait for weeks and go through a complicated due diligence process. This would be a huge innovation when it becomes possible. The tokenization space is, in my mind, about fractionalization and democratization and sort of opening up asset classes so retail investors can gain access to them. So, of course, it's important for the tokenization framework or concept to succeed that we actually have individual investors that are interested to invest into real estate. And we see this by looking at the trend of REITs over the last 20 years, where individual investors that have invested into REITs have actually increased quite sharply. It takes time when a new asset class becomes available for retail investors to learn to understand it and to actually become familiar with it. So they learn how to include it in their portfolio. This is what we have seen with REITs, taking some time. With real estate-backed tokens, it's also going to take some time. But of course, if you already understand a REIT, you will also quite easily understand what a real estate-backed token is. Another trend that is important for the tokenization ecosystem's success is a number of active wallets that are in use in the Web3 ecosystem, and that's also growing quite fast. And in fact, our sort of thesis is that within a few years, we will no longer speak about wallets, or sort of the concept of a wallet will merge with normal accounts. You will have maybe an Apple wallet on your iPhone or an Android wallet on your Android phone. Your banks will be able to have cryptocurrencies as part of your normal bank account. You will get national digital currencies, CBDCs. So all of this will merge, And that will mean that sort of the tokenization infrastructure will just become the normal infrastructure to use. And the word tokenization and wallets and so on will go away or just become normal part of how to do business. So yeah, so we see these trends and the sort of subsection that are both retail real estate investors and wallet owners are potential tokenization users. This, of course, sort of doesn't consider institutional investors, which are also coming quite heavily into the tokenization space, as we see, I think, on this slide here. We've seen a massive interest from the large financial services firms looking at tokenization, doing POCs, investing into the space, building their own technology and infrastructure and so on, and having very significant projections about how the space will grow in the next few years. BlackRock sees this as the next evolution and revolution of financial markets. JP Morgan sees it as traditional finance's killer app. So they are definitely extremely interested in it. They see it as a way for them also to automate and to digitize and to improve, make their own internal processes much more efficient, but also to gain new capabilities in terms of liquidity and trading, both internally and externally. Use cases, we work with many companies globally in the space, and we see many different use cases, but there are sort of three overall categories that are important, I think, to understand in order of complexity. And the first two here are relatively easy to realize now, I would say. The third one is a little bit more difficult to realize and a little bit more expensive as well. But the first use case is maybe just to use tokenization as a way to automate, to make your processes more efficient and more optimal, and to reduce administrative cost internally, and use sort of the tokenization framework to basically digitize and automate your internal processes for how to manage investors, shareholders, actual sort of tokenized shares and so on, and facilitate investments and internal trading and so on. And we have a few clients doing this. One is Marco Polo Exchange in the US. The second use case that I think is relevant to speak about here is fundraising, of course, which is maybe the main use case right now for tokenization, also called STOs. We think this will longer term not be so important anymore, and in fact, tokenization itself doesn't make the asset worth significantly more. But you can actually manage the investment process to a much better degree, and you get an actual solution that is well prepared to manage investments. So Equito is a client doing this in Spain, facilitating investments down to 100 euros, and also paying out dividends in crypto. Market-based capital is a third use case. They've tokenized the property on the DigiShares platform, then listed it on T0 in the US. And they actually had an increase in value of this property in more than 20% in a single year, sort of proving that this illiquidity premium is actually around that level. So this will, of course, this is generally relatively expensive to list on these exchanges, but we want to make it significantly less expensive with our own exchange when we launched it later in the year. The tokenization process, of course, it's a business, a legal, and a technical process. We are primarily working or concerned with the technical process, installing the system, customizing it, and everything else. Christiana and other legal firms are responsible for the legal process, which is still very important to do anything in the space. I would say the second and the third use case, you need a lot of legal support. For the first use case, where you just use the system sort of for internal efficiency improvement and administrative costs, you don't really need the legal service so much. On the business side, this is primarily sort of the customer's own concern, but we can also give some guidance, and we also know people who can consult on these matters. So yeah, so we have a platform, of course, for issuance, corporate management, internal trading, facilitating payments with crypto and fiat, share cap table management, electronic signing with DocuSign, and so on. And then we have also coming forward later in the year, a regulated exchange, regulated and fully licensed exchange for trading of tokenized real estate assets called FuturEstate.Exchange. Initially available in the US, later in Europe, first version will be a simple order book marketplace, which is the simplest for us to get licensed from a legal perspective. And then later on, we want to launch a DeFi native version using liquidity pools together with Balancer. And we are also launching our own token in order to provide liquidity for the exchange. That's it from me, and I will shut down the sharing and give back the word to Alexis, I guess.
Great, thank you so much, Claus, and looking forward to that exchange coming up. One question that I have before, I think there's a series of questions in the chat which I will go to Claus. Are you in the process of integrating a DID solution with the platform, Claus?
Yes. Yeah, we are.
Okay, and when do you expect
been working on
that
this? Yeah, that's a
be...
good question. Within a few months, I would say, because we need it for the exchange actually, and it's about scalability. So we realized that to scale up the exchange, we needed to have something that was decentralized. Otherwise, it becomes too expensive in terms of gas fees. So we're looking at Polygon ID and working on that together with Fractal and Samsung.
And also restrictive in the sense that there's products like bonds that you definitely need to have an integrated DID solution to be able to meet all the KYC requirements. Because, and the reason I'm saying that, we had an inquiry coming from the States actually, tokenizing a bond. So we might be talking about that offline, Claus, at some point. Thank you. I'll go to some questions from the chat. Legal question here. How are token ownership transfers on the Ethereum blockchain reflected in the public registry? Okay, I know the answer, but Christiana, would you want to take this one?
Yeah, no problem. So regarding the transfer of tokens, this is like happens peer to peer. So it's from wallet to wallet. As per the recognition in the legal world, whenever we own a token and that we can prove that that token is in our wallet, then we prove the ownership of the token. The question posed is posed based on the understanding that all transfer of shares appear in a public registry. So that's not always the case, but anyway, regarding tokens will not always be the case. A blockchain is a distributed ledger technology that allows the recording of the ownership on its own network. Therefore, asking how are token ownership transferred on the Ethereum blockchain? What is Ethereum? Ethereum is a network. So Ethereum keeps track of any transfer on it. Therefore, if any blockchain analytics company, if any blockchain forensics company wishes, instructed by a stakeholder, wishes to trace this transaction, they will be able to trace it. So public registry exists and existed up to this moment because no blockchain existed. So we have them, we have to find a way on how to treat them. That is why we see by Europe at least, and we will see it around the world very soon. And we see the upcoming of these distributed ledger technology trading venues. Therefore, since we do get the law, like 3-4 months ago, we have this law, the DLT pilot regime. So that is where we will register these tokens, and that is where we will see the owners of the tokens, and that is where the trading of these tokens will be taking place, regulatory compliant, because they will follow a specific law, the DLT pilot regime. So this is, of course, a very good question, but I would need to like analyze in depth what is blockchain and how it works and what functions it supports and what elements it brings with it and what unique features and characteristics it brings in order to understand why really we don't need always the public registry. So I need more time and we don't have, otherwise I would go on forever.
I think you're more than covered, Julian. I think Julian is more than covered. A question from Amalia. Why will investors buy tokens? What will be the motivation and reasons? What is the approximate yield that will attract investment? Real estate can't promise ×2 or ×3, can it? Amalia, I will give you a short answer on this. Every project comes with its own business plan, its own IRR, return on investment. So it's for every investor to decide whether the offering by the project owner is sufficient for them to invest into the particular project. What we do as FuturEstate Alliance, we actually either help our client to prepare that business plan, or we make an assessment of whatever is presented to us, thus offering an additional level of assurance to investors that yes, this has been reviewed by a firm of professional services, and that adds to the level of assurance for any investor. Mihai has a question, but I cannot see. Here it is. Yep, the tokenization of this. The tokenization of this type of real-world assets seems to be for investors whose sole intention is to receive a return on investment, not to actually use the underlying asset. True, which means the only way to use the underlying asset is if you acquire all the tokens for that particular asset. Yes, definitely very good question. Dimitris, you want to take this one, or Christiana?
Awesome question. Dimitris, please, we can both take the question. Dimitris will share and I will
just bear in mind we're already
necessary.
3 minutes over. Let's keep this to a maximum of 10 minutes over.
This is the last question anyways.
Okay.
Yes, and really quick. The motivation for an investor in a real estate tokenization project can be all the use cases of a real estate in real life. So imagine that we can use and tokenize only the IRR, for example, so they don't have any actual access or any fractions. We can tokenize the actual use. We can incentivize the use. We can incentivize the fraction. We have a lot of different ways to do it. And according to the business plan, these ways can affect or not the underlying asset. The thing is that with the beginning of the classic tokenization methods gives liquidity to the underlying asset without jeopardizing the security of the investor or the real estate owner. So this is the case, and of course there are different and a lot of mixed cases that Christiana will say really quickly as regards the bonds, as regards the more than 10 we already discussed only with Christiana.
I agree with Mihai that if you want to acquire the property to use it, then you would need to actually buy all the tokens, correct? Yes, correct. But I will answer this question of Mihai by posing to Mihai one question. If you have a title, can you sell at some point when you need it? Can you sell part of your house, of your property, if it's only one title? Therefore, in this case, you acquire the X number of tokens, and then you hold an X number of tokens because you want the whole of the property. Okay, you have the money, you buy the whole of the property, you want to use it, fair enough. Okay, you do it. But then you are in a position at any stage down the road to dispose of any part of it. Isn't this awesome? So that is why I replied your question with a question, Mihai.
Great, thank you, Dimitris, Christiana. I think there's another question that just came in from Mihai. I think he loved the answers so much. Where do the property title deeds play into the process? Is it true that whoever holds the title deed owns the whole property? Sounds like with the rollout of these tokens, there will have to be some changes in property law.
Changes in property law, definitely, and since this is taking place in Cyprus, and the jurisdiction is Cyprus, and we're talking about the Cypriot law in this case, just to share that we have already shared the necessary property law changes that need to be done with the government. However, I would reply to this question in this way. Yes, deeds in property do play crucial role. However, does it always play a crucial role? I mean, what about funds? I mean, who has the title? You invest in a fund because you want to profit of it. It's just an investment. So what about when the property is owned by a company? In that case, you buy shares. Similar to the previous example I shared regarding funds where you buy units. So you see, it depends. I mean, if it is crucially important for you to acquire the whole property and then the whole asset, then buy the whole asset and then go in the traditional way, transfer the deed onto your name, the title. It's okay. Why would you go via tokenization? Why would you need to buy an asset as a residence, let's say, via tokenization? You don't need to do that. Tokenization is mainly for investors who want to exit profit, and do it very quickly and in a fast way. Thank you.
Thank you, Christiana. I've posted the email, FuturEstate Alliance email, for any questions that we have not been able to answer or that come up later on. Please share on hello@futurestatealliance.com. Everyone, okay, Mihai, you just managed to get this in. I said 5:10 and you got 2 minutes. Go on. Do you want to say it loud?
Is this
Mihai?
a short question? For goodness sake, it's a
What
big
protects
one.
the investors from manipulation by the issuers is common among the DeFi space for insiders to get their hands on the first issuance of said tokens, then later offloading the bag on new investors, arbitrage, manipulation, unfair first issuance of the tokens. Okay, I'll take a quick shot on this. Don't forget, we're talking about an asset-backed token. There's a real asset behind each token. We validate all investors that come on board. They come in on as I mentioned earlier, on a business plan that gives a certain valuation. As FuturEstate Alliance, we have every incentive to make sure that all projects that are uploaded on the platform are very well checked by us. As you can see, professionals in our areas of expertise. So we have every incentive to make sure that all projects that go on the FuturEstate Alliance platform are well vetted and presented to investors.
Mm-hmm.
If
Indeed, we do have these challenges, Mihai. We do have these challenges. That is why you need to be very careful. And that is why we always accompany the token issuance with detailed agreements, very detailed, concrete, strong agreements.
Yep. Excellent. Thank you so much, everybody. The session will be posted. The recording will be posted on our YouTube channel. If you wish to see it there, please. Thank you so much, Dimitris. You can go to sleep now. It's okay.
Bye, guys. Thank you. Bye. Keep safe.
Bye, everyone. Thank you so much.
Bye. Thank you.
All the best. Bye.
Потом στο κοκκίνο το βλέπω.